Welcome to the Personal Pension Radio Podcast, where you get unconventional insights into wealth building and retirement that actually work. Discover data-driven strategies and learn from a wealth of experience so that you can take your retirement to the next level. Now, here's your host. He was once bitten by a harbor seal, the income engineer, Kraig Strom.
Okay, we are back on Personal Pension Radio. This is the first episode of 2016. 2016 is up and running, and you have found Personal Pension Radio. We are broadcasting today from Mr. Foley's van parked in front of the Riverside County Probate Courts here in California, Southern California. You'll learn more about why I'm parked in front of the probate court here later as we go through the show. For those of you who are just joining us, what is Personal Pension Radio all about? Well, if you haven't noticed, we've got a bunch of baby boomers hitting the retirement age and coming up rapidly to the retirement age, and there is, to say the least, a retirement income crisis in America. A retirement income crisis is the key there, that the retirement planning that's been out there for 30, 40 years has all been save, 401k, Roth IRA, invest, save. There's been very little education and discussion about how do we take income when we actually get to the retirement years, as I call it, the top of the retirement mountain, and we start down the hill into retirement. Now, optimizing retirement income, it does not happen with a product. It's not found in a mutual fund. It's not found in life insurance, real estate, or annuities. No one investment or savings account or product by itself will help you optimize your income in retirement. You've got to have an integrated approach that ties all of these different components together. It's a must. When we think about it, back in the, long ago, people had what? What did they have to provide them financial security and income in retirement? People 35, 40 years ago had pensions. They had pensions. And today, unfortunately, pensions just don't exist unless you are a public servant or a teacher. If you're not a teacher or a police officer or a fireman, you generally don't have any kind of a pension anymore. And this income crisis is just more and more and more apparent. So that's what Personal Pension Radio is all about. We want to help you think through all of the different components that should be on your radar when it comes to your family's financial house, as I call it, the financial castle, right? Making sure that you have all these different pieces taken care of to have an integrated approach to build and protect your wealth and your lifestyle today and generationally, so that you can actually pass that on. So now, a quick disclosure, I am not an attorney. That is a big one today. One of the segments that I'm going to cover today, it's really important that you know that I'm a certified financial planning professional. I'm a CFP. So as part of my education and my requirements to become a CFP, I did have to actually demonstrate a significant amount of knowledge on the legal side of general estate and financial planning. Now, it's important though, I am not an attorney. I'm not a CPA. So don't act on advice that you hear on this show or financial entertainer show or radio or podcast or anything you read in Money Magazine or Motley Fool. Don't act on it is the key. Definitely read and listen. I want you to listen to every single episode of this show and others. There's lots of great content, but the key is don't act on that advice until you have met with a qualified, licensed financial advisor. That's the key there. Too many financial entertainers, writers, bloggers, they are not licensed, they are not regulated, they have no oversight, they have no standards by which they are held. So you really got to meet with a qualified financial advisor to review your specific situation before you act on anything that you might hear on this show. So there's that disclosure. Now, the first segment that I want to cover today actually came from a comment that someone made back to me. We recently sold some of our real estate. We had rental properties, and we had a primary residence that my wife and I, my daughter, live in. We recently sold our rental properties. I felt as if it was more the top of the real estate market here where we live, and I thought it was a good time to make a transition. My daughter's off at college, and as much as my wife does not like change, it was a good time. So we sold real estate and ultimately moved into one of our rental properties. So here we are now in one of our properties that used to be a rental. Now, the question came up recently whether or not we were going to, my wife and I, whether we were going to refinance and work on paying off this house that we're living in now, because this will be a house that we live in for quite some time. And so the question came up, and so be it. And like, oh, okay. Well, let me stop and kind of back up for a second and say, well, wait a minute. I'd like to sell you an investment. So everybody in the audience, okay, so now that I've set this up, everybody in the audience, I want to sell you an investment. And it's important to note, this investment is not actually being sold. I'm not selling you an investment, right? Full disclosure, for all of the folks listening in on the show, making sure that I don't cross over any, boundaries that should not be crossed. So let me sell you this investment. It's a hypothetical investment. How's that? So this investment pays no interest. Okay? So it doesn't pay any kind of an interest or any kind of a dividend payment. So that's number one. Now, this investment also does not pay any income. So it doesn't actually generate any kind of income or cash flow. The investment is also subject to a substantial amount of risk. So this investment has a considerable amount of risk. As a matter of fact, in recent times, some people had lost as much as 50% of the value of this investment. And any access to any cash that has been deposited into this investment is very illiquid, and in order to access the cash, you have to go through a substantial amount of paperwork and a very lengthy approval process, and you may or may not be able to access the cash that you put into this investment. Okay? So, if you'd like to invest in that particular investment, please go ahead and send your checks to the P.O. box that's listed in the website that doesn't exist, right? Okay, so you all know that I'm kidding, but hopefully as you've listened to this and I set it up already, do you know what the investment is? What investment did I just, open quote, air quotes, sell you? Well, I just sold you a primary residence. The primary residence that you live in, okay, the home you live in. This is not a rental house. This is not an office building. This is the house you live in. Is a very lackluster investment at best, really. That if it's paid off, it could be your largest single asset. In many cases, real estate is the largest asset that most people own, and it pays no interest, no income. It has very limited liquidity that has to be approved by a bank underwriter, and it has substantial risk of loss. Not to mention risk of fire, earthquake damage in California, tornadoes in the Midwest, who knows, right? So the real estate you live in as an investment, okay, it's not really an investment unless you can actually access the money to buy groceries or go on vacation. An investment is something that generally has value, that you can pull value back from that. Now, people will argue, oh yes, I live in it and I don't have to pay rent. Well, okay, fair enough. there's the, I guess you would call it the intrinsic value of the real estate that you might have that's paid off. But you got to seriously look at it that way, and this is my opinion. I am not saying that you should not endeavor to pay off your home. What happened was somebody asked me if I was going to pay off my house, and I said, well, heck no. I mean, I just was adamant. I said, of course not. And they looked at me like I was an alien, like, what are you talking about? Why wouldn't you want to pay off your house? Well, I wasn't saying that I didn't want to pay off my house. I just didn't want to pay off this house that we're in today. I have the intention of having a home that is in a paid-off situation, but that house has to be my forever home. The home that my wife and I would live out the remainder of our years in, I would definitely want to have that home in a position to be paid for. Now, a home that I am not going to live in forever, I do not want to put myself in a position where I have a large amount of cash, which is exactly what it is. If I was to start paying off this house aggressively, I could definitely get this house paid off. And then I have a $400,000 pile of cash earning no interest, no income. It's not liquid. It has substantial risk to it. And I have very poor access to it, right? So I don't want to be in that position at this point in my life. Now, later on in life, just this is for me, doesn't have to be for you, but later on in life, I will look at my real estate in the same way. I look at it and say, wait a minute, the house that I live in, what's it doing for me? I'll tell you right now, I will be a reverse mortgage candidate. When I turn 62, I'll definitely be considering a reverse mortgage as long as my wife and I are living in our forever home. Because I can get income from it, I can live in it forever, and now my largest asset, perhaps one of my largest assets, is actually paying me to live there. And I get to live there forever. So this is not a commercial for reverse mortgage or a commercial for don't pay off your house. It was just to make the point, watch your step. Don't just swallow the hook, line, and sinker, get a 15-year mortgage and pay off your house. Well, who pays for those commercials? Banks pay for those commercials, right? So when you hear a 15-year mortgage commercial, the bank paid for it. Why does the bank want you to do a 15-year mortgage? Because they get all their interest faster. They get their money back faster. When they send money out to you to buy a house, they cannot again use that money to loan out. If you do a 15-year mortgage, they get their interest faster and they get their principal back and they can loan it out the other side of the bank faster. It's just business, okay? So watch your step, okay? It shouldn't just be a simple, you've got to pay off your house. Okay, I had this discussion with someone regarding his mom who was, up there in years. She's in her 70s, 80s, and it was just this adamant position that he heard from her that the house has to be paid off. Got to pay off your house. Got to pay off your house. And he actually was wondering, where does that come from? Because he subscribed to a similar line of thinking that I had, that the home you live in. Okay, remember, I'm not talking about a rental house, but the home you live in is a really lackluster investment. It doesn't really have great characteristics as an investment. And he was wondering, where does this drive and this adamant belief to pay off the house come from? And I'll remember this from years ago when I started in the financial world, a class that I had taken that actually discussed this very thing, that back in the Great Depression, back when the world fell apart in the Great Depression, banks were not regulated the way they are today. Banks could actually call up people who were current on their mortgages and call their note due. They could actually take the house even though they were current on their mortgage. And that fear of the bank calling your mortgage due and taking your farm or taking your house, that has just been ingrained into the mentality of several generations now, and it's passed down from great-grandmas and grandmas and moms and dads, and it's come through to today. Still, you hear financial entertainers and people constantly saying, oh, you got to pay off your mortgage, pay off your mortgage. Well, whoa, wait a minute, okay? Watch your step. Think about that investment. Think about that home you live in with these criteria again, and then I'll get off my soapbox. It pays no interest, it pays no income, it's very illiquid, and has substantial risk, okay? If you wouldn't put $500,000 or $250,000 into a mutual fund that had those exact same characteristics, okay, so somebody comes up to you with this mutual fund or this 401k that pays no interest, no income, very illiquid, substantial risk of loss, and they want you to put $250,000 into that investment, what are you going to do? I don't know about you, but I would never put my money into that, okay? So remember that. Go back and don't just get blinded by the fact that it's your home and the home is sacred for some reason. Think about it for a second. And again, I'm not saying that you shouldn't have a paid off home. Just make sure that you're thinking about your forever home, because that's the one you're going to want to have in a paid off position so that you can really leverage perhaps benefits in the future. Okay? Now, those of you who are thinking rental properties, totally different, of course. Rental properties, I personally believe that a rental property should have the longest mortgage you can get on it at the lowest interest rate, so that you are buying the house with, you're essentially having a tenant, someone renting the house from you, paying for that mortgage. That's the best possible way to have it. So that's a whole different deep dive into rental property. But let's just say that watch your step when it comes to real estate and the home you live in. Okay. The next segment, the one that I actually alluded to in the beginning with the van parked out in front of the probate court, is a segment that I called To Trust or Not to Trust. This was actually a listener question about, do I need a living trust? Okay, so this actually goes to the part of wealth building and wealth preservation portion of our mission here at Personal Pension Radio. Do I need a living trust? I've heard this 1,000 times, but I realize I haven't touched on it in a while, and I thought it as one of my New Year's resolutions is actually to update our living trust and our legal estate documents. Okay, so this is where my disclaimer was so heavily emphasizing that I'm not an attorney, okay, that the best possible thing you can do is actually meet with a qualified estate planning attorney, somebody that really knows their stuff. If you ever need anybody, if you want an introduction to someone, you're welcome to just send me a note through Personal Pension Radio. You can get me right there, and I'm happy to make any introductions I can to attorneys that can help you. And my New Year's resolution is just to update our estate and trust documents, right? And so the big question is, do I need a living trust? Do I need a living trust? So, well, here's my answer, and I don't know when I came up with this answer. I might have borrowed this answer from someone else, but the answer that I give people, husbands and wives especially, is the only reason that you need a living trust is if you love your children and your family. Okay, and I am smiling when I say that. If you love your kids and you love your family, you get a living trust. Because most of the time, in most situations, a husband and a wife, okay, especially living here in California, for example, a community property state, they don't need a living trust to pass assets and estate belongings to each other. Okay, so in California, for example, if a husband dies, his estate can pass directly to his spouse without any interference. It's pretty simple, pretty basic process. Okay. Now, on the other hand, if you have children and you have a husband and a wife where a husband has died or a wife has died or both have died, and now we have an estate that might consist of a home, savings accounts, investments, whatever it might be, well, that's the point in time when the question about do you need a living trust really comes to bear. Okay, because if you've got kids, if you've got family that you love, okay, you definitely want to have, in my opinion, a living trust and a full set of estate documents, okay? And I'm going to go through that with you, but let me give you a couple of just quick definitions. So what in the world is a trust versus a will? What is a trust versus a will? So let me make sure that you understand what a will is first. A will is actually a written list of instructions for the probate courts. It's basically an instruction list to say, what do you do with the assets of a deceased person? The assets of a deceased person, okay? Anyone who has passed away without a will, that's somebody, and that's somebody that perhaps had assets. Well, that's going to involve assets of a deceased person. Well, a will covers those assets, okay? A trust, on the other hand, is more of a legal entity that can own assets. And a probate asset is the asset of a deceased person. Well, if a living trust owns the asset and living trusts do not die, there are no assets of deceased person, therefore no probate assets, therefore no probate. Okay? So a will is a written list of instructions for what to do with the assets of a deceased person in the probate court. A trust is a legal entity that owns things like houses and bank accounts. So therefore there's no assets of a deceased person and no probate. Okay? So real quick, what is probate? Well, probate, thank you to our old English lords and ladies from many moons ago for giving us the probate system that we have now today. It is essentially the process of proving in court that the will of a person who has died is valid. Okay? And in California, for example, you have to go through the superior court of the county in which the deceased person lived. Okay? And now here's the thing. Okay? If you go to probate in Southern California, I don't know what it looks like elsewhere, but in Southern California, if your family ends up in probate, it can take minimum 8 months, sometimes as long as several years. I have met people that have been in the probate court system probating the estate of someone who died 3 years earlier. 3 years earlier. Okay? So here's what I tell folks, that if you love your kids and your family, you get a living trust and a full set of estate documents from a qualified attorney who can be there if you need them. If your family needs them, if you died, after you died, you got to have a good qualified attorney that they can call on. Okay? LegalZoom and those free, services online and things like that, they can work. They're okay. But you generally don't have an attorney who drafted your document on call for your family if they need them in the future. Okay, so I believe that you should have a relationship with a good attorney, someone who's going to be there, or their office is going to be available for your family if something were to happen. That's just my opinion, my recommendation to my clients. Okay, so what does a probate situation really look like? Well, number one, first thing you have to know, probate costs money. So people will say, I don't want to spend the money on a living trust. I'll just do a handwritten will, or I'll do a really cheap will that I got from the stationery store, because a living trust costs too much. Well, let me help you understand that probate always costs more than having a trust done. always costs more. I mean, that's just, and in virtually every situation I can think of, probate costs more. Let me give you an example. If you go into probate here in Southern California with an estate worth $100,000, $100,000, and that includes the value of your real estate, other investments, savings, checking accounts, whatever the estate might be worth. Let's say it's a $100,000 estate. The statutory minimum fee is $4,000. That's in part goes to the attorneys that you have to work with to represent you in probate court. $4,000. If you have a $500,000 estate, it's $13,000 statutory. Okay? $1 million estate is a $23,000 fee. So, yes, a probate is more expensive when you look at the end result. If you had a living trust that the family did not have to go through probate, they saved all the fees and all of those entanglements, and maybe you spent $1,500 on a living trust, a full set of legal documents. Okay? So the idea that a trust costs more, and that's the reason that I'm just going to forget it. Well, probate absolutely costs money. Okay? So keep that in mind. Now, there are some benefits, I guess you'd say, from going through probate, is that if you have a contentious family and people are prone to arguments, well, there's a benefit there that there's a probate judge or commissioner, somebody who's going to oversee the process. But of course, that goes right back to the downside, is that there's a judge or a commissioner that oversees the process, and which also means there's lawyers involved, and it's a public proceeding, so there's no privacy. And it can take 6 months to 2 or 3 years to process. Okay, so a trust, on the other hand, right? So once the trust is done by a good qualified attorney, the trust actually, in many cases, avoids even needing attorneys to finalize things after somebody dies. Or, remember, you don't just have a trust that comes to life if somebody dies. It can also come into play if somebody is incapacitated mentally or physically. The trust can also come in and be activated so that representatives can act on someone's behalf. Okay? But with a living trust, we've not only avoided probate, but we also have, if you work with a qualified attorney, if they're needed, that attorney may not cost as much, and I'm going to say most likely will not cost as much as the statutory fees that would have been incurred by the family under the probate system. Okay? The other issue is that the trust can shield the estate from public eye. It's not a public process. A living trust is not a public document. It's not recorded with a county, at least here in California. It's a private document. And a trust can also be used, and you know that I'm big on protection, to shield assets for beneficiaries. It can be used to create special trusts for children with special needs, young children who might need to have money set aside for school and college, things like that. Testamentary trusts that might come to life to fund charities and things like that when someone passes away. Okay? So, do I need a trust? If you love your kids and your family, yes, definitely. Get yourself a full set of legal documents. And that's what I want to go through to wrap up here today. I want to help you understand just the good nuts and bolts of what your legal documents should look like. Number one, the living trust. Okay? If you own real estate, if you have kids and you own real estate, have any other kind of assets that might put your family into the probate system if you were to die or become mentally disabled or unable to act on your own behalf, okay, the living trust is definitely a good idea. Now, a full set of legal documents will also come with a will. So why do I need a will if I have a trust? Well, remember what a will is. It is a written list of instructions for what to do with the assets of a deceased or incapacitated person. So you may not put your favorite thimble collection specifically in your living trust document, but your will have a provision that says all of my assets, even if they're not named in my trust, are intended to pour over. There's a pour over provision built into trust. A pour over will is intended to pour over and be handled through my trust. So even if I didn't get all of my assets listed and labeled into my trust, my will directs all of my assets to go through my trust. Okay, so it's really important. You have to have both a trust and a will that are coordinated together. And then really important, these next two are huge. Powers of attorney. Number one, power of attorney for financial matters. Okay, that is a power of attorney that says, my sister so-and-so has the legal authority to act on my behalf if I am either incapacitated or unwilling or unable to, through mental, like let's say I have dementia or I have a terrible injury that I'm unconscious for a lengthy period of time. Well, power of attorney will come to life. It's called a springing power of attorney, will come to life and allow my representative, whether it's my sister or my wife or whomever, it could be a CPA, it could be anybody you name as your power of attorney, also called an attorney in fact, springs to life when I'm incapacitated, and they can now have the authority to act on any of my financial needs. Okay? So that's a big deal. Power of attorney for financial matters is a big one. The next one is a power of attorney for health care. It's also been called an advanced healthcare directive. That's a big deal. Okay, big deal. I remember back when my dad got sick. Unfortunately, my dad was stricken with cancer, and they went into the hospital, my mom and my dad together, and the admissions office said, do you have a copy of your power of attorney? And my dad just looked at my mom and said, well, my wife is right here. And she says, I understand, sir, but do you have your power of attorney with you? Well, my wife is right here, as if that was going to change anything. My dad, of course, just like, well, why do you need a power of attorney when my representative is standing right here? Bottom line is, the hospital wanted an official legal document that said my mom was his attorney in fact for healthcare matters, a power of attorney for healthcare. Thankfully, we did in fact have that document, and I was able to send it directly over to the hospital. Okay? So it's very important now to understand power of attorney for financial matters is like dealing with your bank and your mortgage company and things like that. And then a power of attorney for healthcare is dealing with your healthcare, your hospital, your health insurance, your medical records, and things like that. Okay, so it's very important that when you get a set of legal documents, it should be a set. It should have a trust and a will and a pour-over will and power of attorney for financial matters and a power of attorney for healthcare. And here's the big, big deal. Oh my gosh, I can't tell you how many times I've seen this screw up. Somebody goes out and gets their living trust done, and then they stick it in a drawer, and they forget to do two things. Number one, they didn't get it signed and notarized properly. Oh, how many times have I seen that? Don't do that. If you really insist on going through, let's say, LegalZoom, one of these online services to get a living trust and your documents done, you've got to then get it notarized, signed, officially signed. Second thing, a signed living trust is worthless until you fund the trust. Funding the trust means you have to, for example, change the title of your house to your living trust. you've got to change the title on your bank account to your living trust. If you own a rental property or if you own a big expensive recreational vehicle, you can also change the title into your living trust. If you don't fund the trust and all you have is a notarized signed copy of a trust and a will, it is all worthless. It's worthless. You just have a worthless bunch of paper because you never actually put any assets out of the probate system purview into the living trust. You've got to fund it. So if you have any questions about this, you can either give us a call through Personal Pension Radio. You can call us. The number's in there. You can also go through and you can reach out to a qualified estate planning attorney who can help you with questions about this. Okay, so really important. My New Year's resolution, one of several, is to actually get our trust updated. It's been a while since we've had it actually updated and reviewed, and that's kind of the final tip or caution when it comes to your living trust and documents. Have them reviewed. Okay. And then another call out I wanted to make for everybody. We've gotten some great questions coming through. Really appreciate the questions, and I continue to try and put these questions like I did today on the show. The website, if you would go there and just tell me, what keeps you up at night? What financial questions do you have on your mind that we haven't covered that you'd like to hear about on the show, that you'd like to maybe have something, get my opinion on it from my perspective? I'd be happy to actually go through it and take a look. Really appreciate reading all that. And thanks again for those who have left some awesome reviews on iTunes. Really appreciate that listener love. And that wraps up the first episode for 2016. Happy New Year, and we'll see you again next week.
Thank you for listening to the Personal Pension Radio Podcast. If you missed anything during the show, that's okay. We took the notes for you. Check the show notes for links, offers, and a full transcript. And don't forget to head over to personalpensionradio.com and download your free retirement income report. While you're there, we'd appreciate some iTunes love. Please leave us a fantastic rating on iTunes by going to personalpensionradio.com/iTunes. Thanks again for listening.